What's up, everyone? It's Karthik with MoneyVest, and this is going to be your update on Sofi, Tesla, Nvidia, and Palantir. Sofi, more specifically, crossing over $18 per share. So a very, very nice move to the upside for Sofi right before the earnings, because they are going to be reporting earnings on let me just figure this out. There we go. So Sofi is going to be reporting earnings next Monday. I've already done quite a few videos on this company already, talking about the expectations for revenue and EPS. Revenue is expected at 674 million. I do believe over $700 million of revenue is possible, with earnings per share expected at 3 cents per share. I believe over 5 cents per share is possible for the company, with a double beat expected, with a guidance raise. That is also what I'm expecting from Sofi next Monday. The market's already sort of front running the move here. We're already up over 8.5%, getting up to almost $18 on the day. And of course, we did talk about the overall technical setup going into today and of course this week. And again, we're starting to see a very, very nice move to the upside, breaking out to that target of almost $18. In our platform, you will also be able to see the earnings volatility, which is another feature that we have added on our platform. So if you come over to Sofi, fundamental analysis, earnings volatility, you'll notice we've got 100% beat probability on the EPS and a 91% probability that Sofi is going to beat on revenue. So you can actually see all the numbers down here and take a look at it from the last most recent quarter all the way till 2021. So we're going back, 11 to 12 quarters here, and every single earnings, they've beaten expectations on the EPS and revenue. The last time they missed was back in the fourth quarter of 2021, but since then they have also surprised on the revenue, as well. So I fully expect for Sofi to beat on EPS and revenue and come in very, very strong on the guidance. However, a lot of that move is now getting priced into the stock here. There's still possibilities for us to break up of $18, but that was the resistance we were talking about. That was a target that I mentioned, and right now we're already getting up to that level. So I'll go over my positions in this video. I'll also break down, of course, Tesla, Nvidia, Palantir, and what I'm planning to do with all the open positions. I actually picked up a lot of Nvidia and Sofi last week on Friday. So if you come back to my alerts, this was from last Friday, picked up over 300 shares of Sofi at 1643. Picked up almost 100 shares at 1375 not too long ago. And then, of course, picked up Nvidia, 200 shares at 137 as well. So sent out a lot of the alerts last Friday because it was a longer weekend in anticipation of the inauguration and how the markets might respond on Tuesday, which was today. And again, sold at the money calls, which I then ended up rolling out today as well, to get them back out of the money. So all the trade alerts with the links are going to be down below. There is an additional 20% discount that we're offering right now until the end of this month that will get your membership pretty much down to $19 a month if you're interested in joining. With a couple more spots left, you'll have access to all the trade alerts, find out exactly what I'm trading on a regular basis, the options portfolio, as well as long-term portfolio updates, and access to the MoneyVest website as well. With the options portfolio now finally cracking above over $40,000 in unrealized gains. So this right here is the current P&L with just over 46%. And of course, a lot of that is coming from Nvidia. I've got 800 shares, 24% higher, $22,000. With Sofi, this was the pickup from Friday. That's the alert that I just showed you guys, 1644, about 300 shares, and that is up over 9.4% right now. And I, of course, got the Tesla positions. Last time I did this buy right, picked it up at 258. And of course, the 62% gain, $16,000 is where we're at. However, options, of course, I do have the 275 call that I'm chipping away on a Tesla, so that's still deep in the money. So we'll be looking at rolling this up as much as I can to capture as much of that capital gains as I can, because Tesla's, of course, well in the 400s right now. But then, of course, I've got the 138 call, 140 call on Nvidia, and I've got the $18 call on Sofi expiring not this Friday, but next Friday. That's going to be after the earnings are released. And if Sofi breaks above $18, this will most likely get rolled out as well to $18.50, $19, $20. I have a lot of expiration here left because it is not a contract that's, in May or June or July, although I do have that as well. But this one expiring next Friday gives me a little bit more flexibility to go a little bit out further in expiration and roll up after the earnings, right? So after the earnings, if SoFi just absolutely rips to $20, I will be rolling it out to like $21 or $22 to then, of course, take advantage of that capital gain. Now, originally, my plan was to be okay with letting my shares go, and that is still the plan. And that's how you should actually treat your covered calls if you're strictly trading them from a perspective of generating some cash flow and also participating on those capital gains, especially the buy rights. For me, I'm comfortable letting my shares go, but if I can take advantage and optimize that trade a little bit better to manage this, from a point of view of rolling options, and I can capitalize on more net credits and collect more capital gains, then so be it. Then it's a win-win situation where I can actually slowly and steadily, increase my strikes and also go a little bit farther out on expiration so that, once again, I receive the net credit and also can capitalize on that capital gains, right? So that potential for that capital gains. So that's going to be the plan for this. Now coming over to my other positions. So SoFi, this one, I've got a lot of shares that are not tagged to any covered calls, and that's a good thing because, again, I want to be invested long-term for SoFi for what I believe it could be, with a ton of potential long-term. Could be a nice 5 or 10x position. Right now it's only at $17-18 billion market cap. And if the goal is for SoFi to become a top 10 financial institution, I mean, we're talking a lot of runway here. So 65%, and then the other 200 shares are currently tagged at this $18 calls, which will also get rolled out again, given if SoFi is able to trade back above $19.20, a breakout over $20 per share. And of course, this right here is the other Tesla position, currently again tagged at $300 call, which I'm going to be chipping away on with rolling up and out for this as well. So I really only have 2 covered calls on Tesla. I've got 8 covered calls on Nvidia, and I've got about 5 covered calls on SoFi, if you do the math here. So yes, I've got 5 because 200 here, 300 on the other portfolio. Then of course, a lot of shares are not tagged here. But then of course, Nvidia, I've got 2. Nvidia, I've got 8 covered calls right now, which again, it's a good thing because Nvidia has been trading sideways and I'm able to capitalize on a lot of premium that I've collected, thousands of dollars in premiums collected over the last several months here. So this right here is, again, the roll on SoFi. So moved it up from $16 to $18 from February to June expiration. That's the one that you see over here. $18 call expiring in June to, again, unlock a little bit more of that capital gain. And these, again, are going to be my... Well, actually, no, I don't have 2 covered calls on Tesla. I actually have 4. I forgot about these 2 right here. So I've got the 850 and I've got the $800 covered call. So these are way, way, way out of the money. Like this is, Tesla would need to double from here in order for these to even risk getting in the money. But they're up 35%. And of course, I've got the Palantir covered call, which is only 2 of them. That are up close to 20% or close to $381. So the idea with covered calls really is to maximize your existing positions, right? But you want to really segregate them to a point where, okay, you're not getting too stressed about your existing positions if your plan is to hold them long term. So it's very important to differentiate between your options positions and your long-term positions. Now, for these, the reason why these are my long-term positions, the reason why I'm selling calls against them is because they're very, very much out of the money. I mean, Palantir would need to almost double, and so will Tesla almost double from these current levels in order for them to be in the money. And I will be looking at closing them out very soon. If I'm up 60 to 70%, these will be gone, and I will be able to collect a lot of premium. Like, for example, I've collected $10,000 for these Tesla calls, and I've collected, I think, over $1,200 or $1,500 for this Palantir call. So it allows us to generate some nice little credit, not little, but a lot of credit, a lot of premium along the way, while also capitalizing on that entire upside potential for that stock. So that's where I'm at with my positions. Wanted to give you a little bit of an update. I do have 4 covered calls on Tesla, 8 on Nvidia, and then 5 on SoFi, and then 2 on Palantir. So that's what I have. That's what I can remember from what I have right now. So coming over to technical analysis, SoFi at around this $18 resistance is going to continue to act as a resistance right now. We are very overbought on the RSI, the MACD, and the L3 banker oscillator. So you can clearly see the incredible rally that we've seen from 1375. It's already up over 32%. And support level now is going to stay put at 1721. So SoFi literally just printed a brand new 52-week high And I do believe that if you have a longer time horizon, we're talking several years out, this could just be the beginning. Because like I said, SoFi is only a $19-20 billion company. And, over the course of the lifetime of this business, if the goal really is from Anthony Noto that they want to become a top financial institution from $20 billion to $200 billion, yes, it's a massive leap, but it's not something crazy. It is not like a $1 trillion market cap company, although that could be the future, long into the future, many, many years out. But it's not crazy to think that the company can go from 20 to 200 billion. So it does have the potential for a 10x opportunity here. And so for those reasons, $18, it's a near-term resistance all the way up to as much as $22 to $26, which I also do believe, after the earnings, and especially in 2025, it's possible that we do test 20s for SoFi once again. So if you come over to the daily chart, you'll notice the last time we were, of course, trading in and around these levels from just December 11th standpoint, but the last time SoFi was at $18 was literally November 2021. So you have to go back almost 4 years in order to see SoFi trading at these prices. That's how crazy this is, because it's been trading below that level for the longest time. And of course, now it's trading back above over almost $18 per share. So this is from almost 4 years ago. So the potential is certainly there. And like I said, my next target is going to be all the way in the $22 to $26 range. That's considering if we break out over $18 for SoFi. Nvidia, I also do like here in and around these levels. A lot of consolidation sideways. Support level is going to stay put right over here inside this green rectangle between 132 and 136. And the next target I've got at 144 all the way up to $150 for Nvidia. So that's going to be the level to watch, and at which point, again, I will be looking at rolling out some of these options so I can take advantage of that capital gain as well as the premiums that I'm collecting. In other words, the net credits. Palantir, on the other hand, is still within the context of a downtrend. So we've got a lower high and a lower low right now, and you'll notice that we got perfectly tagged at this level. So this is the lower high. That's the resistance that we're watching for Palantir, and support level is going to stay put right here at $69 to $70 for Palantir. So this right here, very, very important level of support. And like I said, the resistance all the way up to $80 for Palantir. So this is still within the context of a downtrend. If you break out above this level, fantastic. We're on our way to back up to $80. If you're not able to do that, of course, support level is going to stay put at 70. And there's a very, very high probability for this also to happen, where we get rejected, breakdown, and this right here ends up being the support in the low 60s. At which point, I will be looking at selling puts on Palantir once again. I will be looking at selling cash secured puts to take advantage of that better premiums on the put side, and of course acquire more shares if I need to in and around those prices. So that's going to be the idea behind Palantir. If it breaks out, like I said, next resistance all the way up to $80. Coming over to Tesla, and Tesla's got a big battle. It's got a big battle in front of it, because as you can see that we've got the bulls and the bears fighting right now. We got the Friday's candle with a massive wick, with sellers stepping in to bring us right back under 430. And then on the day today, we were trading as much as 433, got sold off to $406. Like, just imagine the range within which Tesla's trading. However, the bulls stepped in, the buyers stepped in to bring us back above 420. So this was the entire price action. You've got the bears sitting right over here, that no, we're not letting you break out above 430. And then you've got the bulls and the buyers sitting right here, that no, we're not letting you close in the low 400s. And so where do we close? We close at 424, 425, kind of like in that middle range. And so that's what's happening right now, is there's a lot of resistance at 430, but then there's a lot of support in the low 400s. A lot of supply in the 430s, a lot of demand in the low 400s. And so until it resolves in one or two ways, it either breaks out above 430, closes above 430, and we see a nice rip back up to 440s and 450s, or if we break down below 400 again, we're back in the 370s and 380s again. But there is a very strong support at 375, as we discussed in our previous video. So 375, that's really where we got bounced off of. There's a lot of demand there, pushed up over 12 to 14%. But Tesla really is struggling breaking out above 430. So until we get a breakout above 430, I wouldn't be confident in calling Tesla in a bit of an uptrend again. We're still consolidating right now from this downtrend, and right now moving sideways. So 430 is the most important resistance that Tesla needs to break out of. And then we can look at 465 as being the next target. So 430 near-term resistance, 465 is going to be the next one if we get a nice breakout, and 375 is going to be that support level to also watch for Tesla. So let me know your thoughts down in the comment section below. And like I said, make sure that you drop a like, subscribe to the channel. For just 19 bucks a month, you can pretty much access all the trade alerts, all the options portfolio, long-term investment portfolio updates, as well as the MoneyVest website access, and also join our Discord, get all the trade alerts, and engage with thousands of traders and investors from all over the world. So link's going to be down below. Would love to have you on board with this additional discount that does expire at the end of this month. Happy investing. I'll see you all in the next video.